let's pretend that we're getting $460 as our gross pay. All right? There's a 460 here. There's also a 460 here. These two columns are what you're going to be looking at for your gross pay. And this one says at least this much. And the other one says but less than this much. So if your gross pay was exactly 460, that would be on the at least 460 line, not the less than 460 line. You see what I'm saying here? Now, this particular chart is for single, and if I follow this along, if I am single with 0 dependents, then I would have $55 deducted out of my pay for federal income tax withholding. If I had 1 dependent, it would be $44. 2 dependents, it would be $33, et cetera, down to if I had 6 people that was depending on me, they would just say that. So let's compare that real quick to the married side. By the way, what is it there for 0 dependents? For single, at 460, it was $55, right? So looking on the married side, I'm once again looking at the 460. And what is 0 dependents with married? $31. So do you see that the single is much higher? They're withholding more money than if you are married. The next thing that will come out of everyone's paycheck is called your FICA tax. Okay? FICA tax has 2 prongs on it. FICA, do you know what that stands for? Anybody know? Federal, it's given, isn't it? Insurance, contributions act. Okay? So think about this. Who's doing the contributing?
We are.
You are. And your employer is. We'll talk about that later on tonight. But you're contributing to your insurance for when you are no longer able to work. Now, no longer able to work is a big, broad thing. It could be that you're disabled and you're no longer able to work. It could be retiring. You're no longer going to be drawing a paycheck. And so what they're saying is we are insuring the fact that when you are no longer working, you will still get money every month. So the 2 prongs to this, one of them is called Social Security. And that's the money that you get every month, like your paycheck, right? When you're no longer able to work. So you are contributing to this insurance that you'll get paid for. You're insuring your monthly checks to come in once you are no longer able to work. That's what that's for. And the second prong for that is Medicare. And that is ensuring that you are going to have health insurance when you're no longer able to work. How much do they take out of a check? Well, the rates for these 2 are set by Congress, and it can change every year. But right now, and it has been this for quite some time, for every dollar, 1.45 cents is going to be contributed to your insurance for later on, your Medicare. And it doesn't matter if you only earn $1 or if you earned, $250 million that year. Every dollar is taxed for that amount. Now, this guy's a little bit different. The percent for this, for Social Security, right now is set at 6.2%. For every dollar that you make, 6.2 cents is going to your future earnings. But this guy has a little bit of a different to it than this one, because there is a ceiling, or should we say maximum earnings, or like a cap on that. So here comes dollar number 1 that you make January 1, $2, $3, $4. All of those dollars are taxed at 6.2% until you reach a certain amount. By the way, the ceiling or the maximum amount is set also by Congress. The maximum earning amount is $110,100. Which means then, as we're coming on through here, the time that you make right here, all the way up to the $250 million mark or more, none of this you have to pay Social Security tax on. But as we will learn in Chapter 9, your employer, not only are you paying 6.2% to your Social Security, your employer is also paying 6.2% for your Social Security. You have someone then that up to this particular point in time, their cumulative pay has been $109,800. They're getting pretty close to this, aren't they? And then this next pay period, they're supposed to be making $3,000. If you're figuring their payroll, can you take this whole $3,000 and multiply it by 6.2% and subtract that from their pay?
No.
No. You can only do the part that is up to this point. You see? So you would have to take the difference between their cumulative and find out how much would be taxed. And the rest of it would be on the other side that wouldn't be taxed of this. So you wouldn't be using the whole $3,000. Those are mandatory taxes. Everybody has to have that deducted from their pay. There's some things that are deducted from your pay that are voluntary. Health insurance. Maybe you might have child support payments. Maybe deduct something for your savings account, like a credit union or something. All of those are deductions that would be voluntary based. So you've got your big gross pay, and then you're going to be minus, and then you have your cash. Any questions so far? Okay. Up to this point, we've had a little account called wages expense, right? And we've had an account, of course, that we call cash. Basically, this went like this. Our $650 went here, and we wrote a check for $650 there. That would be like an independent contractor. Because this is the gross pay, this is the net pay, and they're the same. There's no minuses in the middle. Now, it's going to be quite different than that, because this amount of gross pay is probably not what the check's going to be written for. It may be only $427.32. I'm just making that figure up, okay? That's what my check is actually written for. This is the gross pay. My debit doesn't equal my credit. What is the difference here?
Taxation.
Taxes. We had, what were the three that we have for sure? Federal income tax.
FICA.
Yes, and we'll split them up. Social Security tax and Medicare tax. And then we may have some others, right? At this particular point then, let's say with Heath, that this is you. You actually made $650, but I didn't pay that to you. I only paid you $427.32. I kept the rest of your money as your employer. Who has to pay the taxes?
The employer.
I have to. So now, who owes the taxes?
The employer.
The employer. Because you paid them. You just paid them to me. And now I have to pay them to where they have to go. So now I owe them. And what is an O? O-W-E. A liability. You with me? So now I'm going to have some new, what do they call? We have some new payables going on. I'm going to, remember, liabilities are going to increase on that side right there, right? And I'm going to have something like federal income tax payable or employee income tax payable, whatever that one is. I'm going to have Social Security tax payable. I'm going to have Medicare tax payable, right? I'm going to have maybe health insurance payable. I'm going to have all of those payables are going to be, I owe them. I owe more after payroll. And now I will add this credit, and all of those credits will equal that gross pay as my debit. I will have a journal that looks like this. It's going to say wages and salaries expense instead of just wages expense. That's my debit. Then notice here, all of my credits, payable, 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 and cash. This is my net amount. That one at the top is my gross. All of these credits will equal that one debit. And that's called a compound entry because my debits still equal my credits. And I'm going to pull this up so we can still see the board. Kind of messy down here, but do you see? If you kind of look over it, do you see how this is a credit? These are all going to be credits. That's these guys. Equal this one debit. And of course the debit's going to be at the top because in a journal we always list our debit first. And we just made this wages expense that we've used since day one. We've just added and salaries. This is only Heath. And I have 200 employees. I have a lot of journal entries, don't I? So that's not very efficient to do it one employee at a time because it's going to be the same ones over and over and over and over and over. So the best thing to do is to get you a big chart, make all of these columns on there, and list all of your people, and then total them all up, and then all you have to do is go to your journal one time and just post one great big gross one here, and one big one here, and a big one, big one, big one, big one. You don't do this by employee. Instead, you're going to do it by the whole payroll instead. This is a payroll register. So it would be that information that we just looked at. Earnings here at the top. From here to here is earnings. So mark that on your paper. Can you see? You see that this is all earnings. This is about your earnings. And we said earlier that the regular is a 40-hour work week. Overtime is anything over 40 hours. And this is the total. So you can mark at this total column, this is actually your gross pay column. So put gross pay somewhere on this column so you know what that is. This is cumulative total. That's what you've made up to this particular point. Some of the problems that you may have to do are going to give you the cumulative total up to this point. Some of them will include this pay period in the cum total. This particular example is including this total with what they have already made. Sometimes you will have one and it will say before this pay period, cumulative total. This is including this pay period. The next one I want you to circle is going to be taxable earnings. And I want you to circle and underline the word earnings. This is not deductions. This is the amount of earnings that I'm going to figure my deduction on. But this is not the dollar amount that I am deducting. Okay, so we're going to take this first example. Sarah, she made $1,800 and she worked 6 hours of overtime, which means that her total gross pay is $1,860. That $1,860 included with what she's made up to this point this year means that her cum total is $111. That's $111,100. What did we say was the ceiling on
110.1.
Social Security?
110.1.
110.1, right? So that means she's right. She's over, isn't she? So you're going to have to take 110.1, and how are you going to find how much of this 1,860 is going to be taxable earnings for Social Security?
Okay, because she's over by 1,000.
She's over by $1,000, isn't she? So 1,000 of this is not going to be taxed for Social Security. Now, do you see how this has $860? That means that out of these gross pay, the taxable earnings of that is only $860. Now let's look at number 2. This guy whose name is James made $760, worked overtime for $140, which gave him a total gross pay of $900, which meant that his cum total, including this $900, is $43,400. Where is he with the ceiling? He's down here, isn't he? So out of this $900, how much of the $900 is going to be taxed for Social Security?
All of it.
The whole $900. We will come back to this column in just a few minutes. All right, so now we know this is how much our gross pay is. This is what we've made up to this point and including this. And this is what's taxable as far as Social Security is concerned. So now we'll look at the second page. The second page is going to be all about the deductions. All of this, beginning right here, all the way through, is all about the minus out of your gross pay. The first one says, what does it say at the top? Employee, what does it say in your chart?
Federal income tax.
Federal income tax.
Federal income tax. Where are you going to go to find the minus deduction, federal income tax?
That little table thing.
You're going to go to the little table, the little bracket table. And you'll need to know their gross pay, and where will you find the gross pay on that chart? Back over there where it said total, right?
Oh, yeah.
You'll find that gross pay, and then you'll need to know married or single, and the number of allowances. And then you'll be able to plug this figure right here. The next one says Social Security tax. This is the minus part. How are you going to, what column are you going to use to figure that one from? Remember, this one we used the total column for, right? What column will you use to figure your tax? It's going to be the taxable earnings for Social Security. Not the total, but the taxable earnings. And this one is what you're going to multiply by 6.2, and that will be your minuses here. The next one is going to be Medicare. Is there a ceiling on Medicare? So it doesn't matter. Whatever amount you make for gross pay is going to be multiplied by 1.45%. So this one is going to work off of that total column that's way over here, the gross pay column. And then these others are all about the voluntary stuff. Health insurance, United Way. If you have a lot of them, you can have a special column, depending on your company, whatever your company has. And then this just says other, so you could just list the other here and have the minuses out beside it. This last, does that say total? That says total. That's not gross pay total. This is the total of the minuses, the total of the deductions. So now, working off of this total deductions, you should then be able to work way over on this side where it said total, your gross pay minus this will equal your net pay. So mark the last column as net pay. That's what you will actually get your cash from. And now, which one of these is going to be the cash credit in your journal entry? It's going to be the very last guy. Because you're going to combine all of these by adding them all down, all the way. So when you work off of the gross total, that is the debit to wage and salary expense. Then you'll have a bunch of payables that are credited, but we're just going to use these bottom ones. And that way, we will only just have one journal entry for the whole payroll. What do you think?
Which one did you say was the cash credit? Okay, so the net. All right.
The net pay will be the cash credit because that's what you've actually written the checks for out of your checking account.
To get the total, would you just add them across?
Good question. Actually, you can double check your figures that way because they should equal this way, then you're going to total them this direction, and then you'll be able to double check them coming across on the total line. You'll be able to double check the total here, minus all these totals, and see if it equals this total. So you can, you can double check your math that way.
I kind of see why Excel is so important now.
Excel is very important. Yes, it is.
I'm starting to see that.
Yes. And in fact, this would be really nice to throw it into Excel, wouldn't it, with a few little formulas, and you're there. So at the end of the payroll period, you have one big journal entry that is journalizing your payroll. You've got your debit, it's the gross pay. Then you've got all your payables that are credited, and that's the amount of cash that you wrote your check for, or you wrote all those checks for. Okay? Now, of course, you also have to keep a record by employee, because there also comes a given time when you have to know exactly, Andrew needs to know exactly how much money Andrew has made. And so that's called an employee earning record. And it looks just like this, except it's just one line. And then the next pay period, it's that same person for that next pay period. So it's just the one person with their one line off of all of those.